The U.S. dollar was lower against most major pairs on Friday. The greenback dropped as investors flocked to safe havens away from the U.S. currency. Trade war concerns and its impact on U.S. companies have triggered a massive sell-off in equities. The U.S. dollar is on the back foot despite strong growth as evidenced by the release of the flash GDP for the third quarter that showed a 3.5% gain, beating expectations. The end of October and the start of November bring a packed weekly economic calendar. Central bank action and employment data will guide markets that are still sensible to geopolitics. Bank of Japan to avoid Halloween surprise. Bank of England to keep monetary policy on hold until Brexit clarity. U.S. economy expected to have added 200,000 jobs in October. Euro to underperform as Italian budget drama continues. The year. USD lost 0.93% in the last 5 trading sessions. The single pair is priced at 1.1406 after a strong Friday saw funds exit the US dollar to look for safety elsewhere. European fundamentals make this a short-term strategy as Italian budget concerns with neither side backing down, and the ongoing saga of Brexit negotiations are major headwinds for the currency. Fears of an economic slowdown in the U.S. prove to be premature, but investors worry that the boost from Trump tax cuts is evaporating. Stocks have been vulnerable as the U.S. Federal Reserve stands firm on its plans to hike one more time this year and 3 or 4 in 2019 on its path to rate normalization. U.S.-China relations have not improved and earnings reports have started to reflect the impact of tariffs on China. The growth gap between the U.S. and Europe continues to widen, but for the most part has been already priced into the euro-USD. The political situation where the European Council is opening too many fronts is a concern for investors. Italy and the United Kingdom are asking for too much in the views of the EC, but it seems there is no clear middle ground in Italian budget negotiations or the trade deal after Brexit. Brexit top of mind for sterling with Bow and autumn budget. The GBP USD lost 1.97% during the week. Sterling is trading at 1.2832 versus the dollar. The equity market sell-off did help the pound gain 0.11% on Friday. The risk-event calendar in England is stacked with the autumn budget on Monday and the Bank of England BoE Super Thursday, not to mention the ongoing Brexit negotiations. The lack of progress in the short term on Brexit will keep the BoE from making any changes with its monetary policy. A no-deal scenario is still very much alive and will limit what Governor Carney can propose, until those unknowns are sorted. The next rate hike in the UK could come until summer of 2019. Stock sell-off puts loonie back in defensive mode. The Canadian dollar was the only major currency to not advance on the weakened dollar. Loonie lost 0.17% on Friday and with that would give back most of the gains earlier in the week and only end up 0.13% ahead of the greenback. The Bank of Canada (BOC) delivered an expected 25 basis points rate lift on Wednesday, putting the currency pair near the 1.30 price level, but a combination of risk aversion and strong U.S. data combined to once again put the loonie over 1.31 ahead of next week. Employment data in the U.S. and Canada will be the highlight for the pair. The U.S. is forecasted to keep its steady pace of growth with employment its biggest pillar. The U.S. could gain more than 200,000 jobs and wages see a rise of 0.2%, validating the Fed's tightening policy and push the greenback higher. Canadian jobs will prove crucial as the BOC was more hawkish than anticipated at its press conference following the rate hike announcement. Monthly GDP and raw material prices on Wednesday will precede the jobs announcement and together they will paint a clearer picture on the economy. Oil losses for third straight week. Crude prices were higher on Friday but continued to fall as supply anxiety with conflicting Saudi Arabia comments and downward pressure from lower growth forecasts around the globe. The equity market sell-off also dictated the direction for oil to follow. Organization of the Petroleum Exporting Countries, OPEC, and other major producers are starting to worry about oversupply as their production cut agreement is coming to an end, but at the same time global energy demand might be on the decline. Gold rises as safe haven appeal persists. Gold rose 0.28 on Friday as the stock market sell-off hit the U.S. dollar. U.S. fundamentals continue to show a strong economy, but investors are still anxious about falling stocks and headed towards the safety of gold. Gold has recouped its place as a safe haven after 6 months of losses. The Fed's monetary policy and trade disputes have made stock markets drop, and with investors liquidating long positions, they have chosen the yellow metal as a destination. November is full of geopolitical risk events with U.S. midterms, Italian budget and Brexit all in the agenda. Gold is expected to benefit from rising uncertainty, but is sensitive to correction once the dust has settled. Market events to watch this week: Monday, October 29, 8:30 a.m. USD, Core Personal Consumption Expenditure. Tuesday, October 30, 6 a.m. Euro/EU Gross Domestic Product. 10 a.m. USD/CB Consumer Confidence. 8:30 p.m. AUD/CPI. Q Tentative JPY BOJ Policy Rate. Tentative JPY Monetary Policy Statement. Tentative JPY BOJ Outlook Report.